Actually, it was part 3 that I did yesterday of the Detective Holmes follows the case of the Smart Money TV series with markets.com. Hope you're enjoying it. And yesterday we were very fortunate to have a beautiful setup in the New Zealand dollar, US dollar. And that today is set up again. And I've been on the Squawk box, which is basically this here. And I won't put it up now because obviously we've got people listening in. But the Squawk box is where we're taking trades. We're actually letting our customers know which trades we're taking and why and what the market's doing. Now, today, we've had a beautiful trade in the euro and a beautiful trade in the Aussie dollar USD. My colleagues at the Gibraltar Stock Exchange, their head trader there, Jawad, is working with me at the moment, and we're trading together and looking at these charts. Very interesting, actually, what we've been picking up. So I'm joined today, I'm very pleased to say, by 2 Wyckoff experts. You probably would have seen me mention them yesterday on the show. First of all, we've got Grigory Margolin, who's our Chief Technology Officer. And as you probably will hear by his accent, he's originally from St. Petersburg in Russia, but he now lives about a mile from me here in the New Forest National Park in Leamington. Gregory, welcome to the webinar. And if you'd like to come and say hello to everybody.
Thank you, Gavin. Hello, everybody. Gregory's here. I hope you will enjoy this webinar today. Thank you, Gavin.
Thanks, Gregory. And I'm also joined by my very good friend, and what I said yesterday in the TV show I echo today, is a world-leading expert in the Wyckoff volume spread analysis method, author of a wonderful book, well, 2 books actually, but we'll talk about the book later on and get Philip to just tell you a little bit about it, because I highly recommend it. I know it's already making a lot of sales on Amazon. Philip, welcome to the webinar, and maybe you could just give us a little bit brief background for the new people about your experience in this business.
Yeah, thank you very much, Gavin. Well, I started, and I'm really starting to feel my age now, because I was thinking about it the other day, and I was thinking I started in the markets just over 50 years ago, 50 years ago. And I can still remember it as if it was yesterday. It's strange how things stick in your memory. But it was the London stock market, and I sort of cut my cloth on UK stocks, really. And that was where I started. And I started in late 60s, and went through the early 70s, and that was a wonderful learning experience for me, because at that time I knew very little about the market. I was working on fundamentals, really didn't understand how the markets work. And then we had the oil crisis in, I think it was 1972, 73, and the index, the London index, fell from about 550 to about 146 in 2.5 years. And that was a real wake-up call for me, to realise that I knew very little about how the markets really worked. After that, I got involved with technical analysis, thinking that might help me to understand the gaps. But I struggled with that. And around 30 years ago now, I came across Tom Williams, who, as we know, recently passed away. But I found his work interesting, because suddenly I was looking at something that made perfect sense, supply and demand. And that was really my focus for getting involved and studying the markets in much more detail and trying to find out what the missing link was. And thanks to Tom and his endless patience and other people who've been involved within TradeGuide over the years, I'm in the fortunate position now, and it's very lovely to be here today and to be able to help others. So that's really my journey.
It is, and that's the name of your book. Philip, do you want to tell us the name of your book?
Can you remember it? 'Cause I can never remember the title. I changed it half a dozen times. Was it My Journey of Discovery?
Yes, to volume VSA. Yeah, I never have trouble remembering the name of my book, but yeah, sometimes because you keep changing it. I just came up with one name, and that was it. Right, everybody, let's get straight to it. Okay, so thanks everyone for joining us. We got a lot of you in here, a lot of you new. Let's start then straight away with who am I? I'm Gavin Holmes, formerly a police officer and doing a TV show with markets.com called Detective Holmes Follows the Case of the Smart Money. That's a horrible haircut I had as an 18-and-a-half-year-old copper. But now, of course, for the last 20 years, I've been trading and investing using the Wyckoff VSA. So in the show and what I do in these webinars, is we present evidence, the case, if you like, about how to follow the smart money, because that's what we're doing. We're watching the footprints of the big players. If you haven't seen the television show, it's on our YouTube channel, which is simply www.youtube.com/tradeguider. And if you subscribe to the channel, every time I put a video up, sometimes I do 10-minute educational videos, you'll get an alert from YouTube to tell you that there's a new video that you can go and watch. And I've got one coming out tomorrow on a stock that you must see. So I'll show you how you can actually subscribe there. And then as soon as I put that video up, it will tell you and go and look at it. It's on a US stock. That's all I'm going to say. So I wrote 2 books. Philip's written 2 books. My first book was called Trading in the Shadow of the Smart Money. And the second book is called The Complete Volume Spread Analysis System Explained. For those of you here, I can give you a copy of that book today and show you where you can download it. It's basically from the front page of tradeguider.com. So that's me. And as I said, why did I write the book? Well, very simple. I've been working with Tom Williams for many years before he passed away, and he gave me all this knowledge. But Tom kept saying to me, even in the early days, Gav, you have to write a book. And I said, Tom, I can't write a book. Now, the word can't is the most negative word you can ever use because it means you're not going to do it. So then I started to think, well, actually, I can. What's stopping me? Now, it took me a long time, I must admit. But the point was I had the knowledge. And now that knowledge is shared with many thousands of people around the world. The books, getting spread out. It's just been translated now into Spanish by an editor out there. So there's a lot of. I would have to say that the chart reading method, Wyckoff method, the VSA method, is making a massive resurgence here in 2019, and we can see that in our database. And this, of course, here is the master who passed away in 2016. I think he'd be fairly proud of what we're doing with the Wyckoff VSA method and how we're projecting this. And we're very lucky. We travel the world, or I do a lot of it. And Philip, I'm sure, he's going to be on the show, by the way, in the next couple of weeks. So will Gregory. So you'll see them with me looking at live charts. And we'll be doing live broadcasts as well, not recorded ones. So, no room for error there if we get it wrong. No pressure then. So this is, as I say, Tom Williams, who is for those of you that don't know, is the inventor of the volume spread analysis methodology. And I call him affectionately the master because that's what he was for me. He was like I said yesterday in the show, like my second dad. In fact, I met him a few months after my dad passed away, and he then took over in effect and said, Gavin, I'm going to teach you to trade. And of course, I had no idea about markets. I didn't know anything. I'd never traded. I didn't even look at the financial markets. And if I look at my journey in life and where I'm at today, anyone can trade. And you can be successful at this, but you've got to have the right knowledge. That's very, very important. So this was something I just want to very quickly show you this story for those of you that didn't see it in the show. But this was a great story that a couple of Australian guys have emailed me and said, can you just recap what happened here? And because it's quite amusing, actually, how the markets work. Now, in the trade I did on Wednesday in the New Zealand dollar, after we finished the show, I was monitoring it on the app. And guess what we saw? Bag holding. I closed the position short and went long. And up it went. So in one day, on TV I was short, and then I went long. And you can do that. And I want to show you how I use the VSA strategies. And I was using TopBot, and at that point I was using Super Scalper, both together. Okay, and this is my colleague Jawad. He's in Gibraltar at the moment, and he's on WhatsApp. And what we're doing, he's asking me comments and questions about what to do. I better just quickly tell him I'm in a live webinar. So hold on a second. I don't think I forgot to tell him, but there we go. So anyway, but it's a good example here. So let's talk about this story, right? Qantas nosedives on profit warning, June of 2012. Now, why do we buy on bad news? We only buy on bad news when the chart tells us so. And there is a major list of indicators that are programmed into the TopBot strategy, which find what we call climactic volume, which has happened today. Now, shares in Qantas dived to an all-time low after the airline warned profits would slump by up to 90% due to deeper losses at its international operations. Weak travel demand and soaring fuel costs. The news is bad and it's getting worse. Is that an opportunity, do we think, to buy? This is the day it happened. Day after, in fact. There's the news story. Bang, down we come. I want you to all notice the volume here. Now, let me ask you all a question. What do you notice about the volume on that chart? What do you know, especially the new people? What do you notice about the volume here?
Trend alignment to the upside has arrived.
Okay, just type in, especially for the new people. What do you notice about the volume here? It's ultra high. That's good. It's massive. It's Yao Ming. Correct. Now, this here on that terrible news was the start of accumulation. The start of accumulation. And then it broke out above the old top and we had a massive rally in Qantas. We then had a bottom reversal, which we had over here. The volume's slightly less than it was here, and that was the rally. Now, there's a stock that's doing this right now in the US market, and it's broken out. That's known as accumulation. So, Philip, let me bring you in. One of the things that I really couldn't get my head around when Tom was teaching me this was that when the day that the news comes out and the stock plummets, your natural emotion and gut instinct is, especially if you're holding it, is get rid of it. But the last thing you want to do is buy it, even though it's at 30% cheaper than it was the day before. And then you might hold it for sometimes several months. Tom told me he held the stock for several years before it went back up. And they just kept accumulating on these green indicators, which are called VSA indicators. Why does accumulation seem to take longer than distribution, which is selling? Because it does. It seems to take a lot longer to buy something back than sell it at the top. What's causing that?
Well, you've got to remember when the market's fallen for a long period, as in the case of a stock like this, as it gets towards the bottom, it shakes out a lot of those herd, the public, the weak holders, and they all start selling and panicking. But the thing is, once you get a day like that with that massive volume, doesn't mean the market then will go straight up again, because what usually happens is there may have been that massive volume and there may have been a lot of panic public selling, but the professionals don't know at that point whether there's any further public selling left. And it's this which causes the long sideways movement, because over a period of time, remember at this point the news is going to be bad. So every time when bad news comes out, the stock gets pushed down again. And it's that constant pushing down back into those areas where the low is, which gives the professionals information each time. Now, what you want to see ideally is each time it pushes down to where the lows are, where you have the massive high volume, you see slightly less volume each time. That means that every time it pushes down, there's less and less public selling coming in. And when you get to what we call in Wyckoff terms, the last point of support, what you're looking for is a push down on much lower volume. Now, the low volume tells you that there's very little selling going on by the public. And if you know that the selling by the public has now completed, or almost completed, then that stock is primed to push up. Now, I know you, Gavin, and I always look for the price to push up above the top of the accumulation area, which you've got marked with that green line. And what I'm looking for then, once it pushes up above that green line, is for it to come back and test, which is a markdown on low volume, again showing there's no selling present, and then you're off in your bull market. And that's the key. So it takes a while to accumulate because they're checking each time to make sure that there's no further public selling. And sometimes what will happen is the bad news will push the market down, perhaps even lower prices than where you saw the massive volume. That can be used as a shakeout. So the professionals use that as the market gets marked down, panic selling still taking place by the public. They come in and buy, and that causes price to finish up on the high of the bar because they've absorbed all that selling by the public.
Now, at the top, it's the opposite. The other thing, Philip, just quickly, this VSA method that we're showing you, we're showing it here on a stock chart, but it works in every market and in every time frame, correct? Let's not be...
Absolutely.
Yeah.
It will work on a 1 minute chart, and it will work on a weekly or monthly chart.
And it'll work on a 100-tick chart, as I'm about to show you in NinjaTrader 8. And you can use that in other platforms as well. So let me get straight to the next part of this story, which is the opposite. So we know there was a massive rally in Qantas, and 3 years later, the story comes out, Qantas flying high. Sorry, excuse the pun. After record year. The dog agrees with me anyway. So Qantas flying high after record year. Qantas's underlying performance in 2015 calendar year was the best in its 95-year history. That's very good news. With underlying profit before tax rising to $992 million. Now that's called bullish news. Just bear with me. I'm going to shut the door here. So we get this bullish news. Now, is that a time to buy or a time to sell, do we think? To ask the audience, what do you think? Is that a time to buy or a time to sell if you're familiar with volume spread analysis? Let's just get a consensus of opinion amongst the group, and I'm hoping you're all going to answer the same thing. Yeah, that's right. That's exactly what happened. That's the day after the news came out, the end of a rising market. And this is in TopBot, which is our scanning system. That's TopBot, which I'm using right now. Yesterday, picked out in the New Zealand USD, the trade that I took live on the TV show. Well, I was already in it, actually, when I arrived at the studio, so that wasn't quite, I didn't take it in the studio. But that was the signal, and it came in on a 15-minute chart. Now, Philip, this is what the psychology of trading here, right? You buy low and you sell high. And that sounds like a really logical thing. And yet most traders don't actually do that at all. They do this opposite because they're using the MACD, the stochastic, the moving average. So what here, Philip, you've got the accumulation now, but look how quickly this fell. Why does it seem to... I always feel that you can make more money shorting quicker than you can be buying. So I seem to like shorting more than I do buying sometimes. But obviously, we do both. But this signal is one of the most important in the software. Do you want to explain what's going on here?
Well, first of all, as we said, this is the opposite of what we saw at the bottom of the market. You've got to remember that as human beings, we're wired to go with the group. We all like being part of a group. We feel comfortable being part of a group, even if it's wrong. But it's very difficult to go against the group, and this is where the public, the herd, struggle with the markets. So what happens is, as the market gets marked up and starts pushing up into a bull market, more and more people start coming into the market. The news starts to improve, everybody starts to feel more confident about the stock, they buy it, and towards the top, the public are probably buying as much as they can get hold of because they're really keen on the stock. And of course, the professionals who bought right down at the bottom have now got large profits, and they want to get rid of their stock. Now, they can't just dump that stock just like that, because if they did, price would collapse. So what they have to do is they have to engineer the sales. And what they do, they sell into the buying by the public at the top, which is frenzied buying. Remember, the news is going to be really good, and people are rushing into buys because they think they're going to miss out on an even bigger gain. And as the professionals come in and sell, they're very careful not to sell too much. They sell enough to meet the buying by the public, but not too much that they push the price down immediately, because that would alert wiser investors to what's going on. So sometimes you'll find that they will sell, as they did on this chart, literally on one bar right at the top. Remember, that's a weekly chart. Other times it will take place over a much longer period and can be several months even. So it depends on how the distribution is going to take place. But in this particular instance, what you're seeing is what you call end of rising market. Now, this is a very narrow spread or range on the bar. What's happening is every time the herd are coming in and buying, the price is not being allowed to rise on that buying because it's immediately being met by selling. So every time the buyers come in, the sellers immediately match the price, which effectively leaves the price almost unchanged. Now, sometimes you don't see that. Sometimes you'll see buyers coming in, the price goes up and the widespread. But here, what we're seeing is immediate selling by the professionals as soon as that buying takes place. The professionals don't want to wait at all. They're confident that they need to get out right at that point. So that's what enterprising market is. It's in the right place, at the top of a market, it's a very powerful signal.
It is. And guess what? There's some of them showing up. And in fact, I've just had an email alert coming in right now. You can hear that in the background. And I'm going to show you, it's coming in from my NinjaTrader 8 software, which I've got programmed in with a strategy I'm testing, slightly different time frames. And I'm going to show you this right now. So let me just, before we move on, talk about what happened after the end of a rising market. So we had this massive volume on this bar here, which you saw. Let's just go back there. You can see that's the bar I'm referring to. If we zoom in, you can see that's the bar on the massive volume. But then the market goes up the very next day, and the volume is much more diminished than the previous 2 days. And then we get this, which is like a reversal and then a collapse. Now that is happening right now. Now, in fact, I'm in a trade right now, but before I get there, what do we want to do? We want to move you. When Philip referred to the herd, we weren't being derogatory, by the way. That's not at all. We want to make you a predator, a smart money trader. That is our mission at Trade Guider, Trade to Win, and Trading the Markets. That's what we do. So, first of all, for those of you that haven't read the book, Trading in the Shadow, you can get it with my compliments and a video that goes with it. If you're watching this on YouTube, which many do, here it is. Okay. You just enter your email and your first name. That's all we need. Now, once you've done that, you go into our database and you're there for good. And then, but basically, as long as you're subscribing, you get all our alerts for the various live trading events like we're doing today. Right, let's get straight to it. Okay, so just to be clear, I'm currently short here, okay, on the Aussie dollar. Okay, so this is my entry. There's my stop. Okay, this is the account number, just so you know it's a live account if you want verification on it. I'm short for a reason, but I'm actually going to show it to you right now. We're also short in the euro. The euro. Now, for those of you that are subscribing to our Squawk service, you already know we're short because we talked about this at 10 o'clock this morning when I first saw this setting up. This is the reason for it, and I'm going to explain the setup to you. And I'm going to bring the stop down shortly to the bottom of that bar as this runs. Okay, so currently at the moment, the entry's on the green line. Let's just get rid of this for the moment so you can see it. This is my FX Choice MetaTrader 5 Pro account. I also have a live account with markets.com as well. I also trade my live account for futures is with Infinity Futures in Chicago. I don't have a live account with NinjaTrader, but I will be showing you today, because we've obviously launched NinjaTrader 8, how I'm using the charting there to use trades for the futures markets and Forex at the same time. And I'm going to show that to you right now. So let's go straight in here to I'm going to show you tick charts here. And again, please just tell me when you can see my screen. Okay, if you just let me know when you can see my screen, and I'm going to explain this all to you so you're absolutely 100% clear on this. You should be able to see a chart of NinjaTrader 8, 64-bit, with 100 ticks chart. You should all be able to see this. Let's just check before I move forward. Okay, so we're short the euro, we're short the Aussie at the moment. There's plenty of other alerts coming in from the software. But for the moment, I'll focus on what we're currently trading. Okay, everyone said yes. Let's then now look at this setup. Okay, let's explain it to you. So first of all, this is NinjaTrader 8, okay? And what you can see here is I've got my smart technology up here working on tick volume and time frames. So I've got the tick volume chart here and the time frame charts here. Now, interestingly, I've set the time frames in the smart technology to these time frames only for the purposes, which is basically a swing trading. It's sharpshooter. You can see that the Aussie dollar here, let's focus on that. I've got it set again to find any principles, is completely negative. On the 15-minute, we just had a trap up move, just finished, which is why it's fallen. That sent an alert to me to the email account, which I'll show you. On the 30-minute, the same story. On the 60-minute, same story. But here's the one I love, the 120-minute, which is a new time frame I've just added, which if you're owning the software, you can add that. We've got the setup. It's a 2-bar setup, the trap up move, followed by no demand. That's why it's collapsing in front of you. This is a live chart. This is not a PowerPoint. And you can see over here on the 4-hour chart, before the move happened, we had the beautiful thing called the up thrust. Now, this is a deliberate attempt by the smart money to wipe everyone out who were short before moving the price down. Now, let's go into some really close analysis here. Close this down for a second. I'll come back to the actual alerts that you're hearing going off in the background because there's quite a few of them. Over here, we've got a couple of things going on. Now, hopefully you should all be able to hear me okay. Let me just switch this mic on. I'll go to the different mic on this computer. Right. Right, that's the feedback gone. So we can see here a few things in the software. Now, this is NinjaTrader 8, 64-bit. And what I particularly like about this version is you can basically change the tick charts, okay, or the second charts, or you can do it minute or range charts. Now, I've been using 100 tick charts on this particular platform. I'm basically looking at this using what we call the trend clusters. Now, this is the trend clusters. And these are only available in version 4.7 of the software. And what happens with these is they act as either support or resistance. Now, these trend clusters relearn themselves on each price bar. And on a 100-tick price bar, like happened over here, the clusters, when this signal appeared, were right above it. Now, they've moved a bit higher at the moment, but what do these represent? I'm going to bring in Grigory Margolin, who developed this. And I gave credit to Grigory yesterday for developing this, because this was Tom's original idea, and it came from a professor from the London School of Economics who was a trader, and he showed Tom a system that went back in time and was able to project out into the future support and resistance levels at multiple areas. So what does the market work on? Supply and demand, cause and effect, effort versus result. And the most important thing here is identifying trades at support and resistance levels. Grigory, welcome to the webinar. If you want to come and say hello.
Thank you, Gavin. Hello, everybody. Can you hear me?
If you want to just switch your mic on, Grigory.
My mic is switched on. I think you have
a sound check.
Can you hear me? Hello? Can you hear me?
I can hear you loud and clear, Grigory.
Oh, good. Thank you, Philip. Most probably Gavin is as usual on another computer.
Oh, I've figured it out. Yeah, it's basically the. Yeah, hi Grigory. Yeah, no, it was basically I've muted the mic on the other one. So Grigory, welcome to the webinar here. Now we've got the clusters at the moment on a 100-tick chart, and we can quite clearly see, look, that they're acting as resistance up here, and the price bounced off it on the no demand. Well, very clearly they were right above. Now we've got these orange and purple clusters as this market's falling. We're getting a hell of a lot of alerts coming in, by the way. But here, why do these? Well, first of all, what does this represent? You programmed it in. What does it represent, and why is it so powerful?
Well, it represents the points of support and resistance. It's not a lines, it's not the levels, it's a points. Or we can say temporary support resistance areas. So those trend clusters are created by intersection of the trend lines. They are they have different severity levels, let's say, or different importance. And in the software, it's marked by different colors as well. So what does severity mean, or let's say importance mean? It means what kind of reaction we should expect from the trend clusters. We have three different groups of trend clusters: the gray, purple, and orange. The gray one, we are calling them normal trend clusters, and usually price is chopping around that level for some time, resting, and then continues the direction in the same trend where it was before. When we are talking about second group of the clusters, what we are calling strong clusters, very often price bounce off that level of that point, and then it tries to attack it again. Might be several times attacking that, and depending on the volume and activity of the smart money, that level might be broken, or in most of the cases the price is rejecting. But again, volume is the key here, and if professionals would like to break that level, they will have to put an effort on that. The third group of the trend clusters we are calling ultra strong trend clusters. Those clusters are usually giving very significant point of support or resistance, and in very many cases the price is reversing from that point, from those points. How it works? Well, if you will look into the order flow, you will find quite a lot of orders on those levels, and those price levels, I mean. And to move the price further to the direction of the trend, you will need to, let's say, eat all those orders, resting orders, which are set, or let's be more precise, limit orders. You will need to eat all those orders in these areas. If you will not do so, then the price will either stay on that level, which is not usual thing, or it will reverse. So, just to make it clear, this particular implementation is not of those trend clusters, is not using order flow as such. It's just using trend lines, a lot of trend lines, and building these points from those trend lines. But possibly in the future, we may get more precise picture if we will use more order flow and orders in exact levels of the price. Any questions so far?
No, I think that's good, Gregory. I think that's covered that. We've got quite a lot of alerts, as you can see, coming in from the Ninja platform here. Now, basically what you're going to see, I'm going to reset this now so we can see. Now, we can see over here, we've got a sign of weakness. The moment the market hit these clusters over here, and then it's bounced back up off them. So you've got heavy clusters above us. And Gregory, what's the most important colour for the cluster? Is it the grey, the orange, or the purple one?
Purple is ultra strong trend cluster. So it's, I would say, it pretty much depends on the time frame. The thing what I have forgotten to tell, higher time frame is bigger the move, or let's say bigger reaction you will see from the trend cluster. On 1 minute chart, if you will look on the tick chart, let's say small number of the ticks chart, or 1 minute, 2 minutes, 3 minutes, the price will just stay on normal gray trend cluster, just possibly for the few bars, 3-4 bars, and then go in the same direction. But if you will look on the gray clusters on hourly chart, it may cause, and in many cases it does, several hundred ticks move to another side against the trend. So it pretty much depends where on which time frame the trend cluster might be found. But I mean, with no doubts, the most important one is the purple. If you didn't change the colors, purple or ultra strong clusters. By the way, Gavin, can you look in 5 minutes New Zealand JPY?
5 minutes, New Zealand JPY. Right, I'll need to go back to my other screen here. Hold on.
There might be a trade immediately now.
Okay, New Zealand JPY. Bear with. By the way, I'm just getting some alerts coming in here from the system. I've got a lot of them that just came in all at the same time. These are all trade alerts on various time frames. I'll come back to them. Let me go to the New Zealand JPY. I just have to add that. Let me just make sure I've already put that up. No, I need to add that. So there we go. Actually, Gregory, I'll give you the screen actually because I don't have that chart.
Gavin, no, I don't have this on my screen. I just can see on another screen, so it can be easier to.
Okay, there it is. Okay, so you want the 5 minutes?
5 minutes.
Okay, there we go. Look
at last bars. So we do have very, very high volume. Actually, I have a bit different picture. Anyways, yeah, here, just a few bars back.
Yeah.
You can see 2 bars, right? Yeah. The 1 bar, no, just go back, more. No, other side, to the left. Yeah, here. Look at the volume. It's the highest volume of the day. I have even higher values on active trades. So we have support here. Then at the end of the chart, we have another buying coming in.
Yes.
And then, I mean, there are quite high volatilities coming, and we can see an activity of the smart money. So I think we may get here nice scalping long trade at the moment.
Yeah, I agree. I'm going to watch to see if it changes behaviour on the 1. So let's actually see if we can get. This is the 1 minute chart. So if you go back to the 1, we're starting. There's the clusters on the 1. We can see we've got some buying here on very high volume, stopping volume. It stopped the market once, and now over here we've got at the same level strength coming in. So it popped up in the next 4 minutes. Now what we'd like to see is a test of this weakness, and that will push higher for certain. Let me go back to the other screen because I want to show you the euro now. And we'll go to the Euro USD, where again we're currently positioned short, but we've just had a trade setup appear at the cluster. Okay, so it just appeared at the cluster. Just bear with me a second while I. Okay, so it's the Euro USD. And we'll watch this. I'm just watching for this next bar to close. It's closed down, which is exactly what we want. So let's. Okay, and also we've just had this trade on the New Zealand dollar Japanese yen. Then we're going to watch. I'm going to actually monitor that on the other screen here to see if that starts to pop. They've just tested it, Gregory. If you have a look on the New Zealand dollar Japanese yen, they've actually just tested it.
Yeah, I can't see. I can only see 5 minute chart, and I can't open the 1 minute. And unfortunately, I cannot trade at the moment due to some other reason. So I would be going right now to that trade.
Let's just keep just watching to see if we're going to break this low on the euro here and the USD, because we're short already. But I want to just see if we actually break this. Right, I've got Jared on the WhatsApp here, so just bear with me, from Gibraltar. And we're now looking at this level. So this is a key level now on the euro setup here. Notice, by the way, just to explain some of this to you, this is what we call the VSA trending system. It's the medium-term trending system. And you'll notice that when the market begins to rally, it turns green. But overall, the majority of the medium-term trending system on this 100-tick chart has been red for about 85% of the trades here. And we go short wherever we see, if the red is aligning like it's done here, you're in a clear downtrend. Okay, you can see the red aligned with the red. We've got an up thrust. We had a similar setup there. We had obviously the one that's happened here, but the green was in there, but that's still a good trade because of the overall trend is down. And then as we watch this 100-tick chart, the clusters are now above us, and we've just had here, very clear, no demand. No demand is very simple. It means into the area where there was supply here, there's now no interest because the market's weak. Now, if that cluster disappears in the next 20 to 30 ticks, because I'm using a 100-tick chart now to manage the whole trade on my other computer here, all right, then this here will change, and we'll see these clusters potentially turn to purple, which would be beautiful for where I place my stop if I'm going to chase this down. We're at a key level. We're at the fix in the next 13 minutes to the fix. Now, the London fix, there's two things that can happen at the fix, which is why I've already moved my stop lower, is sometimes at the fix they'll do an up thrust and then it will move. Other times, if it's really weak, it'll just take out this line here, this support line. So this is the one we're watching on this trade right here. Philip, no demand in a downtrend. One of Tom's favourite setups as well. We've seen multiple instances of the weakness in this downtrend. So here's the high volume as the market was marked up. We've got weakness in the background. We have the mushroom that I talk about in my book. We're already short, and it's the same with the Aussie dollar. The market's moving, it's giving us trades here, and we're at this support line, which I believe will get attacked, and you'll get a high volume bar with a wide spread down. That's a beautiful additional setup. But talk us through this setup that just happened on the 100-tick chart. It's already moved down quite a few pips on the Forex chart. This is Forex I'm using here. I'm also, by the way, just so you know, trading futures, to show you here. I don't have an account with NinjaTrader. My account's with Infinity Futures. I also have two other futures accounts as well. And we also have a futures account for the fund. But here, if we look at the 6E, it looks the same, okay? I'm going to put the 100-tick chart up here. So we're looking at spot Forex, and now we've got the futures market here, okay? And it's doing much the same thing. So you can see here, we've got the same principles in a downtrend that you need to look for. Supply coming in here, the up thrust here. Same result. Now, this is a tick chart, okay, of the euro. And what we can see again here is where the weakness is. Here was the weakness, and it's a 100-tick chart. Let's go straight back to, however, the spot Forex, because that's what I'm currently trading. And I'm looking at this support level to get taken out as we're doing this live. Okay, here it is. And I'm using two of our charting packages to trade this. I'm now looking here at Sharpshooter. I've got Super Scalper in the background, but I've been using TopBot to identify these high volume bars. You can see here, as it came up, narrow spread, increase in volume up here. That's a sign of weakness because markets are getting marked up quite deliberately. And then up here, what do we have? No demand. Sorry, not that. It's the one before it that was weakness here. And then over here and over here, supply. So there's the supply coming in. As they start, you can see the volume increases, the spread narrows, it drifts up. But as it drifts up, what do you notice about the volume? So as we drift up, after the supply entered on this very high volume, as it was marked up, as it drifts up higher on the tick chart, the volume decreases. That's weakness. And here comes some more setups. So they're firing off thick and fast. Let's have a quick look at what's going on. All right. So I'm going to go through each one and we'll have a look. So we're looking at the hourly, the 30, the 15. Swissy, yen, okay, an up thrust on the 15-minute chart, but we're not in trend alignment here at the moment. Okay. Let's have a quick look at the New Zealand JPY. Okay. Not in trend alignment, but it was earlier. Let's have a look at any that are in complete trend alignment. Okay. Because at the moment they're not. So there's one nearly, the Aussie again. Look, here it is. Almost there. We just need this to turn red. And there's the up thrust on the 5, which is why, of course, the Aussie dollar has fallen. Let's restore all instruments for scanning, and I'll show you how it works. Right. And here they are. So on the GBP USD, we've just had an up thrust on the 2-minute chart, the same on the Japanese yen, and the same on the New Zealand dollar. Nothing yet set up on anything else. So what I'm going to do is watch to see how these clusters react at this level. Yes, I can look at the Aussie again, certainly. Doing the same thing. It's found some support down here, and it's just whipsawing right before the London fix. Right, let me move over to good, that's done. Philip, gold. While we're looking at these charts, we've got, I forecast that gold a few weeks ago in the webinar was going to come down to the 1265, 1270 level. Could you give us, please, your opinion on gold and the S&P 500 from a longer term perspective? Because I know a lot of people who attend these webinars, they come to learn about VSA, obviously they come to see the software and what we're using. But obviously at the moment, you can see I'm using some technology that I'm going to share with the new people exactly what it is. Because at the moment, what we see here is a lot of weakness in certain instruments, meaning that the dollar is strengthening, which was not to be expected. And that's, of course, what happens. Philip, could you, I'll give you the screen. Could you take a look at gold and the S&P for us? And Boeing, if you've got it.
I can certainly do that.
Okay, let me give you the screen.
Just let me know where you can see the screen.
Yep, see it fine.
Lovely. All right, start with gold. So this is the gold futures, and this is a weekly chart to start with. We're in a long-term downtrend defined by this black line and this black line.
Yep.
And actually, if I go back to that trend, and I'll just put the... Oh, I've got center lines in. That's okay, yeah. So this is the center line of the trend channel, and these two outside of the quarter lines. When we've got a very wide channel like this, it's quite useful to actually have those quarter and center lines in. So long-term downtrend. If you look up here, we've got this massive high volume bar here on the, I'll just get the right bar, the weekend of 11th of November 16, which if my memory serves me correctly, is when President Trump was elected in the States. And what we've done, I've marked the top of that bar, which is at approximately $1,405. And you can see as price has gone up, it's had several attempts at that level, and it's failed on all occasions. And also, at that same level was more or less the top of this trend channel, which offers natural resistance anyway. So we know there's a lot of resistance up there. Now, I've also marked the 1366 level. That was the old, because these, without going into too much detail, these contracts are adjusted continuous contracts. So every time the contract rolls over to a new month, the figures have to change on the previous prices. But that was the original level that I had for resistance at 1366. So this area between the 1365 and 1405 level should mark significant resistance, partly due to that massive high volume bar, and partly the high volume bars that are pushed up here. So this area up here now is offering very significant resistance. You can see the high volume bar there as we push up. You've got the high volume bars here, several high volume bars. Remember, it's a weekly chart, not a daily, so there's quite significant resistance. The markets then come off. We found support in August of last year, around about the same level we found support over here. And then the markets tried to rally up. As it's rallied up, notice how the volume has been declining here as the price has been going up. So let me just move this down so I can get to my number of bars. There we are. So put 100 bars up, then it's a little bit clearer. So we'll start from here. Price is pushed up, continually going up, and notice how the volume is falling off all the time as it's pushing up. That's a sign of weakness when you have significant weakness in the background as well. Because if you're going to push up through these areas to the left, you need effort. And effort comes in the form of volume or activity. If you don't have a lot of volume or activity, you're never going to get through these levels. Now, if we look up the top here, you can see the volume was quite low. We did get testing, but if you look at that bar, it's just above, slightly above average volume. It's closing at the low of the bar, and it's a poor result from that testing. And that's because we've got all the significant resistance right above the price here. And you can see then the market started to push down. Now it came down for a couple of bars. We've got a test there. That's a fairly high volume test. But then look what came subsequently. 2 bars later, we pushed up on an up bar, and we've got pretty high volume on that bar, and the computer is telling us there's some supply coming in. So supply is starting to come in and overwhelm the buyers. Market's down next bar, which confirms the weakness. 2 bars later, you've got an upthrust, which again confirms further weakness. It's back into that area where we had the supply, and the market's then coming down. Now, if we go to the daily chart, just convert that over. I'm only going to put 100 bars up on this because it's easier, I think, to see. So we've got our downtrend channel in place. The only thing I would say is the last 2 times we haven't hit the bottom of our downtrend channel. There's a little bit of buying came in on this down bar on the 16th of April, which has then tested, and the market's then tried to rally up. But as it's tried to rally up, you see there's supply there. We tried to test that here, but there's been no real response to that. So to me, this is just looking weak. There's still supply. We're coming down, if we come down to the area around the 1260 is a support level. But I still think this market, unless we see some significant buying coming at some point, this market I would expect to just continue down within this downtrend. Now the next level of support, there is some support in this area from previous areas where the market has come down and had some buying coming in. But at the moment up here, I'm not seeing any signs of longer term support. The market every so often will have a little bit of buying, allow it to push up and have a little bounce as we saw here and here. This is just to unwind an oversold situation. But we're not seeing any significant buying, which is going to push the market right up to new highs or anything like that. So for me, this just looks as if it's going to continue to fall until we get down certainly to this level, and then we'll reassess and see if we see any buying or support coming in at this level. If not, then you just expect it to continue falling. So that's that one. Now the S&P, this is the cash market. I'll just do the daily chart on the S&P. And that's quite interesting because if you go back over to here, we've got a level I've got marked on the 21st September last year. And it was this bar here. Now this is triple witching coming in. You notice 2 things about that bar. First of all, very high volume. So we know the professionals were active on that bar. But also, again, I'll put less bars up and let's scroll back. So I want to show this very clearly. It's this bar here. Notice how narrow that range of the bar is. It's a very narrow range. Remember we were talking earlier about end of rising market. And that was almost the equivalent of an end of rising market. Because you've got narrow spread, the very high volume, it's up into new high ground, it's the highest price that it's been. That was clear weakness. But more importantly, if we look just over to the right, you've got confirmation. And this is a bar that's marked up with average volume. It closes on the low of the bar. It's an upthrust type bar back into that area, and then the market is primed to fall. So if we go back over to the right edge of the chart again, you can see this level that I marked between the 2927 and 2941. And look where we are right now, right up into that area. Now, if I just put a few less bars up, we've seen a little bit of supply coming in on that bar. That was on the 12th of April. And ever since then, the market's pushed up. And here we see, again, a bit more supply to push into this area. You'd expect to see supply that's going to push through here. And the market then tries to test here. But these bars here are starting to look quite weak. It's not pushing through this area at the moment. We tried to test there, but the volume was too high. So yesterday we had one of Gavin's favourite indicators, trap up move. Now, if the market falls again today, closes lower, that will confirm that signal, and then we're probably going to push down from here. Now, I wouldn't say there's a significant amount of selling in here, but I just think at the moment, this market's just got overbought. And I think we're due a correction. And this area between the 2927, 2941 is definitely resistance, as we saw looking at the background of the chart. And I would expect that this is going to pull back from here. If we do push through it, then it's going to take effort, so there needs to be volume. And you then need to see a test, which is a markdown on low volume once you've pushed above here to confirm the market's going to continue to push higher. But at the moment, what we're seeing is some weakness coming in, and I'd expect this market now just to pull back, and that would be a healthy thing to happen. So, you want to be able to look at Boeing was the other one. Boeing is quite a quick, easy one. I can do that very quickly. Yeah. Boeing was marked down, obviously, on the very bad news. You can see this bar here. This is a daily chart. Massive volume. It was absolutely huge over several bars. At the moment, there's nothing really you can do with this because it's priced within this trading range of this bar, which is 365 to 403. What we're looking for is for this to push above 403, come back down and test, and then you'd expect it to push up. Now, at the moment, it's just churning within this area. There's still too much supply, which is why it hasn't pushed up through here yet. But what we are seeing is when it comes back down, you notice the volume is now a lot lower. That's quite a good sign. But we need to see a bit of effort to push up. See, we're getting lots of testing coming in. But we need to see an effort pushing up here through this red line at 403. If we can get that, and then we pull back and test, then you expect to go higher. So I think that's about it, Kevin.
Wonderful. Thank you very much indeed, Philip. And that echoes everything which I was looking at on the longer term. Let's go straight to some email alerts now coming from the software. I'm going to just show you a few of these to show you how they work. So we have a base charting package, which you can currently get from our new website, which is tradetowin.com. And it's aimed at the retail market. It doesn't have smart technology in it. Hence the price is much, much reduced from using the smart technology. But today in my trading, I've been using the smart packages, which has in it the trend clusters and also the trade alerts. Now, I'm going to show you here some of these emails that have come in. So about 25 minutes ago, we had an alert on the euro here on the 1 minute chart in MT5. Okay, in MT5. And I'm going to show you how on a tick chart, right, in Ninja Trader, it was confirmed, and in the futures market, it was confirmed. And this is how this works. Now, how many alerts? I've got a question from an email from David. David, you're saying, how many alerts can you expect to get on a daily basis from this system? That's a very difficult question because it depends, David, on A, how many instruments you're scanning, B, okay, what time frames you're scanning, because the bigger the time frames that you're scanning, the less alerts you're going to get. But today, I've deleted a lot of the alerts from earlier, but let's have a look at what we've had since we started the seminar. Okay, and let's open. So here, I actually deleted, I haven't opened all of them because there's been too many. I've only traded the ones that I like, which is the Aussie dollar and the euro. Now, there are many options here. If you open an alert, you're going to see that I've got this programmed in to look for up thrusts on different time frames. Now, the rule is the bigger the time frame, the bigger the move, which is why we've taken the Aussie dollar trade today and we've taken the euro, because both of those instruments, and in fact, there's other trades. You can see here, let's look at some of these other ones of what we look for. All right, here you can see US dollar JPY. This was earlier on, the up thrust, -10. So I'm looking for up thrusts in downtrends. I'm not interested in these in an uptrending market. If I see uptrends and an upthrust, I don't take the trade because it's in the wrong place. But these are looking for them in downtrends, and you can see there's a lot of them. Now, if you're a scalper, you want to be using the 1, 2, 3, 4, 5 minute time frame, and you can be in and out fairly quickly. Now, I'm going to move straight over now to what I thought was going to happen on my trade here in both the Aussie and the euro. And we'll go straight here before I come back to the here we go. So we talked about the upthrust in the euro on the spot forex market. Here on the tick volume, as that upthrust appeared, no demand appeared. And actually over here, similar situation. So the tick volume often confirms what's happening in the time frame charts. And with this, you can actually change the time frames, the tick volume time frames very quickly. Now, watch what happens when I move out to 1,000 tick chart. This is fascinating. Okay, look at this. This is what's causing this weakness. All right, it's a gotcha bar. Remember in my book I talk about the gotcha bar? On the 1,000 tick chart, you see it absolutely perfectly. And as you move down different tick charts, you start to see the VSA principles. And you can do it really quickly. You don't, there we go. There's the gotcha bars on the 500 tick, and they're here. We've got right on there for the no demand bar. There's the upthrust. Okay, and look, that's why we're falling. And look, it's in the right place. Everything's negative. The diamonds are red. The medium-term trending system's red, and we're in bearish volume territory. Let's move it down to the 400 tick chart. Look at that. Red, 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 and of course, the upthrust. 300 tick chart. Okay, similar scenario. You get indicators in all the different tick volume charts. You get no demand, you get upthrusts. Just here, look, before this move that's falling on the, this is the 300 tick chart, the no demand bar. But let me show you the ones that I've been using. I've been using a 100 tick chart, as you saw. And look at these clusters. They are superb. We hit this cluster and we've rejected it, and we're stuck right now in this support line on two grey clusters. These are incredibly powerful. By the way, I've made these wider, but you can reduce this if you want to. It's completely scalable. I've just done it to make it easy for people to see. So here's your support, secondary support. Now we're coming down on an increase in volume, and we're stuck on the tick chart in the cluster. Perfect. Now, we're going to watch this for a few more minutes and watch these clusters relearn themselves, because when you combine VSA and Wyckoff at support, or in this case at resistance, your probabilities of making successful trades, as we've shown here today and on the TV yesterday, are much higher. And all we're dealing with here is probability. That's it. Remember, trading involves risk. You can lose money trading. There's no guarantees. But what we've done with this software, thanks to Gregory and thanks to Philip for writing these dialog boxes that go in here. These are the ones that you must read. If you read the dialog boxes, you'll know why the market's falling. You'll understand what we understand. There's a couple of people got questions. I understand. Just bear with me. I want to stay, because I'm in this trade right now. So I want to just keep watching and show you what's happening on this cluster. It's rejecting the cluster at the moment. What I want to see happen now is, I told you, an increase in volume breaking this low. Okay, not much volume there on the tick chart, but it has closed on its low. So now, if we look at where we're at, because I'm already short, I'm not taking a trade here. You don't chase the market, but when you're short, you look to see if the volume comes in and pushes lower. So let's watch this together. And now we'll see if these clusters here that have just relearned themselves act as resistance. I would like to see these clusters turn orange or purple. But again, what I like doesn't matter. The market won't do that. It'll do what it says. And here it's telling me that the serious resistance is where the breakdown happened. Look, where the orange cluster is. Where the breakdown happened, there's the cluster. Great question that came in. Are these clusters good for using stops? Exactly what we do. If this breaks down, I'll move the stop down, and I'll show you on the other screen how I do that. I'm using the MT5 platform here to actually trade it. Okay, just see if there's any other alerts coming in. Gold. Oh my goodness me. Right. Gold is breaking down as well. So we talked about this. I'm going to go straight over here to the 15-minute chart of gold, and we're going to get short here. Just bear with me. All right, this is the 15-minute chart of gold. Can everyone see this? Because we were looking for a short trade with the guys out in Gibraltar. We saw this happening in the downtrend. We had an upthrust, we had supply, and then we had the trap. And Philip said that's one of my favourites. And we've come up and hit the close of the trap. Now, if you wanted to trade this as a scalper, 1 minute chart, you look for upthrusts. Let's see if we've got any weakness. There's the no demand. Do we have any upthrusts at the same level? Hence the breakdown now, and everything's turning red. You'd expect this now to start to fall down. This is gold. Okay, now there's questions coming in, so let me try and answer them. Right. Yes, Rizwan's saying if you get Super Scalper as any of our software, even the base software, you now get trend clusters. I mean, I'll talk about that in a minute, Rizwan. You will get clusters in any version of the software because we're now on version 4.7. If you're on the old version, 4.5, then you'll need to upgrade, and we can do that at a special price. And I'll tell you how to get that in a minute. Let me just... Okay, Daniel was asking what time frame was the euro. Well, I was using a 5-minute chart, but I'm also using tick volume here, Daniel, which is combining. Jimmy, okay, we'll get you set up. No problem. Can you email? Let me just have a quick look here. I've got quite a few questions. Yeah, Jimmy, if you want to just email Laura@tradeguider.com, that's my wife, and I will make sure that we get. AJ, our support guy, is not here at the moment, but Grigory's looking after support, so we'll get that over to Grigory. Did you fill out a ticket, Jimmy? I think you said there was a problem. That's been fixed now, by the way, at Trade to Win, just so you know. Okay. Yeah, hello, Paul. Nice to see you. I bet it's late over there. Okay. Chris, just put in a support ticket. That's probably the easiest thing to do, and then we see it. Yeah, Daniel, you're not using what I'm using, so you will not get the same indicator. If you're on a different platform, you're using different data feeds. So I'm combining. So one platform, this is tick volume. If you're using MT5 or MT4, you will not get the same indicator at all. You can't, because it's different data. But the same thing is happening in the market. It has the same reaction on price. So here you do have an upthrust on the tick, but look, this is the tick volume. So everything's ticks. If you're now using MT5 or MT4, you can't get tick volume on. Well, you can if you can set it, but what you get is a minute chart, a 1-minute chart. And I'm going to show you actually now on the gold, exactly on a 1-minute chart, what's just happened. Okay, so I'm short on gold, and let me show you the setup. So we're absolutely clear. So can everyone see the chart of gold? And here we go. So this is now a 1-minute chart of gold. We've been talking about weakness, and it's just come in. And here is, and I'm short on the other screen here, but here you can see it. The weakness has come in. Everyone can see it. All right. But then as it's fallen, everything's turned red in the system, and then it's gone up on no demand. And that's why it's falling. It's not difficult. This is all follows the trading plans that are on the website, which you can actually download. Now I will show you that now, and then I'll start taking some questions. So let's first of all show you two things: something that's new and something that isn't new. So first and foremost, a few of you have asked, how can you get this software because you're new? There's two ways. There's two areas that you can now go to. I would recommend anyway, if you want to find out more. First of all, these are the alerts that have come in. We have the package that I'm using here today is this one. It's the Smart Center trading package. It's got smart technology in it. All right. And I'm using MT5, which you've seen, and I'm also using NinjaTrader 8. And I'm looking at futures and Forex combined. With Ninja 8, you can use stocks, Forex, and futures. They do all three, okay? If you click on details here, it takes you to the web page that says Trading and Investing Solutions, all right? So package 1 and package 2, you have details here, okay? If you click on the details package, let's say you're looking at Sharpshooter Super Scalper. If you click on that, we let it load. You've got 2 videos that you can view showing it in action, but also, most importantly, you can click here to download the strategy document. Okay, now that is the document that I've been using, all the rules from that I've been using today. Now, one of the things we're also doing over the next 24 hours is on the outright purchase of the software, we have a discount and multiple licenses that we can offer, but we're not doing it on the website. We're not doing it publicly. It's for this webinar only. And to get the promotion, what you'll need to do first of all is email laura@tradeguider.com. I'll post that in there, and you have to put in the word offer. Then we'll look on our database to see what you currently have, and at that point we can tailor a package to you, and I'll put it in here. It's just Laura at tradeguider.com. Okay, now this is for the smart technology. It basically we can give you top bot, sharpshooter and super scalper as a combined package now. So you get all three strategies, and we can do, if necessary, more than one license. So if you've got two computers or you want to use it on TradeStation, let's say Infinity AT and Ninja Trader, we can do that for you. Now, I've just typed that into the audience. You should see that. The second thing that you need to be aware of is if you don't have the budget, to spend on, because our software, as you can see, is $6,000 to own. There are leasing options which you can have, but now we've launched a new website called Trade to Win. Now, this was only launched last week, and it's had a couple of teething problems which we've now fixed. But this software that's sold from this site, it's not smart technology at all, but it does have the ability to scan, which is what you've seen today, which will give you the email alerts, which I've shown you here today, and it will give you the trend clusters as well for a very low price, a very low entry price, because a lot of people felt that when we moved Smart Center Pro off our main site, that we'd abandon the retail trader. And I can assure you that's absolutely not correct. We have not abandoned the retail trader at all. This is the site that we've put together for customers who possibly haven't got the thousands and thousands of dollars to buy Smart Center Pro or the smart packages. And if you click on the Buy Now button, you can see the pricing options. So if you want to purchase the package outright, which is the base charting software, by the way, it's $2,000, one-off payment. If you want to lease the software and the monthly package, which also includes, by the way, trading alerts, okay, and you get details of the trading package there. These are your options. You can actually get involved with us if you want the futures and forex alerts that I've been using here, $99 a month, and they can be delivered to you in various mechanisms, including email. So go and have a look at that site. If you want to find out more about it, just click on the trading package tab, and there's a video there that explains it. Okay, I'm not going to play it right now, but everything you need to know is in that video. It's 3 minutes long, and you'll be able to figure out exactly what's going on. The euro is going down. Of course it's going down. Well, we know that because we were short. So let's finish off before I take any questions on the euro. Okay, and the Aussie, of course, doing the same. Aussie's now at support. Euro is, of course, after the upthrust. You can see why it works so well, because we're in a downtrend. Everything's red, as I mentioned. It's in the right place. And the clusters have relearned themselves. They're above. So it hit the cluster, rejected it, and then came down and made a new low. This isn't too difficult to understand. Laurie, we are doing stock alerts as well, and I'm going to officially do a webinar on that on Saturday to show you what we're just about to release. We've got stock alerts already, but what we want to do is be able to show you in the scanners how those alerts work, and I'm going to show you that on Saturday. I'm going to do an event on Saturday. Okay, VSA budget. This software and approach to VSA is simply right. I can't see the whole question here, Theo, so bear with me. Good night, Paul, over in Australia. That's yeah, Theo, I can't actually see your question, but I don't know why it's not coming up. It's oh, okay, I see it now. It's not a question, it's a comment. No, Ken, no. The Sebastian course is much more advanced than anything we've done, just so you know. It's an advanced course, the course by Sebastian. I highly recommend that course. It's the one that I believe is been groundbreaking for those that have got it. It talks actually about what's going on right here with this increase in volume pushing lower here. Now let's go to the trade itself. Okay, so we'll do the Aussie dollar trade and then we'll do the euro trade as well. Okay, let's just enter that trade in gold again. Right, so let's go to the screen here and we'll put up the Aussie trade first. This is using my FX Choice account here, and I'm using Smart Center. And this public account is very small as well. It's not a big account, just to prove that this works. So here we go. And then I'll take some questions. Okay. All these entries are based on what I've been teaching you here today. So it's all based on the logic behind it. Okay, Rizwan, I shall look forward to meeting you. Yeah, I don't have a public WhatsApp account because if I did, I would never stop answering questions. And I'm obviously working on a fund as well. So I don't give that out publicly, but you can always email, if you've got questions, laura@tradeguider.com. No problem. Can you all see my screen, by the way? Because I'm now just about to manage this trade through for you. It's the hourly chart of the Aussie. Here's the trap up move. I had my stop right above here, which is the no demand bar, right, which I bought on the close of it. And now it's broken down between the low of this bar and this bar. So the stop simply moves down to there. Okay, that's the first thing on the Aussie. All right, I'll answer any questions about these trades for you in a minute. Just get the stops to where I want them. Okay, Euro US dollar. I entered this position during the webinar based on the upthrust on the tick volume chart. And what I'm going to do now is bring the stop to profit and just let that run. Now, we've got a widespread down bar, but I do expect to find possibly supported, but look at where the clusters are. I've put my stop just above the grey cluster. So I'm hoping here that what we'll do is bump and come back down. We'll see if that cluster holds, but whatever, this is a scalp trade. I've been in it 19 minutes, approximately. The reason for the trade was here. Okay, you've got the upthrust and in the background, the upthrust, and it's in a downtrend. This is one of the strategies that we teach in sharpshooter. We look for upthrusts in the downtrending market. And over here, there was a short that I didn't take initially. I got in a little bit late on this close here because I was talking about the Aussie dollar trade. The Aussie dollar trade's currently up 298 pips, Steve. 298 pips. For the Aussie dollar, Chris, I was using, to enter the trade, I used sharpshooter and top bot together. The top bot gave me the signal that there was weakness, and then sharpshooter got me in to actually take the trade. See if we can make a little bit of profit on this trade first. This is the Aussie, the euro rather, and then we'll look and see what the Aussie's doing as well, and we'll finish off with that. Gold is still weak, yep. See if I get a fill here. Filled. Done. Let's go back to the Aussie. So that's a little scalp trade there. Okay, so there's the stop on there. That's going to be more of a swing trade. There's a bit of buying coming in here. But if that breaks lower, I've got a lovely target for this trade down at the low here. Where the support, see where this is supported, this is going to attack that and test this level where the price support was, where we got the stopping action, and then we got here this test. So they had a test of this stopping action. It rallied, but then look over here. Look at what happened. It's a mushroom. It's the classic example. Again, if you haven't read my book, please do. This is what's happening. And the catalyst for this down move is that. Look at the volume on it. That's why this is weak. It's a weak market. Okay, so questions. Any questions? Yeah, oil is tanking, Bruno. I've noticed that as well. Any questions before I wrap up? For either Gregory, for Philip, or for myself? Any questions at all? Again, if you do want to buy the software, you can go to live chat on any of our websites, which I'll show you how to do now. You just basically, let's say you're interested in Trade Guider. and you actually got a question about the purchase, we can do a very good deal on the outright purchase. Click on the chat with Laura, click on chat now, fill in your details, and then click on start the chat. Now, please be patient with us. Don't suddenly expect an answer in 10 seconds. These things take time. So stay on the chat if you got any questions, and then we may get back to you in 5 minutes. It may take half an hour because we get a lot of them. But Laura is my wife. She does have access to me for questions. So that's one way. The other way is to email, and that works better for us. Laura@tradeguider.com. LAURA @tradeguider.com. And again, what we'll do then, from a promotion point of view, is we'll send you a special PayPal link with a discount on it for the product of your choice. Just let us know what you want. Please put in the email, if your email is, I want to buy this, I want to lease that. And then rather than pay the full price, we'll do you a deal. All right. Let's have a look at the questions. Yeah, Daniel, in the Squawk box, you do not see the screen. What you end up getting is a message. And you do need to have the Trade Guider software. You can't really do without it. You do need to actually have the software. And then what happens is we send an alert via the Squawk. So, for instance, today, I talked about the short in gold. And I also talked about the short in the Aussie and the Euro. So today we were squawking about that. And basically I say, here's the setup. These are the indicators. Here is the numbers. So you get the indicator numbers. And I also give where I'm in the trade, I will talk about the entry as I take it and what the position is. Like here, for instance, on the Squawk box, if you look at the 15-minute chart, just here, where we actually entered into the trade was on this bar. All right. So we had sign of weakness 148 into a previous area of weakness. And that's what you've got to look at. You've always got to look at the background. Price rejection happened multiple times on this area. So there was a real clue that the price was about to collapse. And then over here, we had a massive volume spike on the 15, and there was the weakness. And that's why we went short. And we were filled immediately, and the stop's now above the last indicator that's come in here, which is, of course, the trap. All right. And then over here, we've got a bit of buying coming in. Okay. A little bit of support. It's a test, actually, but that test could easily fail. Ultimately, I made a nice 200 odd pip move here, but I could let this one run. The Euro trade, just so you know, made 58 pips on the Euro, and it's just popped back up. Right. Let's just see if there's any other questions. Philip, any final words of wisdom from yourself for the audience here?
No, I don't think so, other than just say be patient with your trading and don't try and trade all the time. If you see an opportunity and it meets your criteria in your trading plan, then take it. If not, be patient and wait. You don't lose money sitting on the sidelines.
Correct. Gregory, thanks for participating today, and some words from you.
Yeah, well, actually, nothing else to add here. Good luck, guys. Be careful, and always follow your rules of the trading. That's it.
Yeah, great. Thank you, Gregory. Thank you, Philip. From us, everybody, thank you very much for joining us today. I will post this on YouTube, and let's just have a quick refresher of where we're currently at on the tick charts here. Okay, so we're basically going up at the moment into this area of weakness here on the Euro. Similar story with the Aussie. Okay, and if we look at gold, we can see here on the tick chart, this is a 3-minute chart, but if I put the bigger picture up on the 1,000 tick chart, it's going to take time to load that data. So I'm going to show you this on the other screen. The data will take a little bit of time to load because that's 1,000 ticks. Okay, there it is. So 1,000 tick chart. What did we notice down here? The buying coming in, and just over here, the last indicator that came in as everything turned green, as they marked this up, the test of the breakout. So it's a complete markup. They bought it, but they took it down, tested this area, and it's now, that's quite a strong indicator. You don't see it very often. The test of a breakout, quite a strong indication of some buying coming in to support gold down at this level. Right, thanks everybody. I don't see any further questions. God bless, take care, and I'll get this up on YouTube for you. See you again soon. We're hopefully going to do an event on Saturday on stocks, so I'll see you for that. Take care. Bye-bye.